Hey team, it's Mikey Millions here, and in this video, I'd like to share my thoughts on why it's time to ditch Robinhood in favor of better brokers, and to discuss who those better brokers are. Robinhood was our beloved for several years, but I think Vlad has just crossed the line too many times, and it's time for us to move on to less abusive relationships. We get abused by the market all the time. No need to get abused by our brokers too. But before we get started, in the interest of disclosure, this video is sponsored by nobody. I am not receiving compensation from this video other than from YouTube, and if anyone uses my referral links. However, Webull has sponsored videos in the past and may do so in the future, but this video is not one of them. Alright, first, let's talk about why I think it's time to ditch Robinhood. Although I thank Robinhood for igniting this commission-free revolution, there are a handful of indications that this broker is not on our side and is not going to have our backs when we need it. First, we have to face the facts. Users of Robinhood are not Robinhood's clients. We are Robinhood's products. Robinhood's actual clients are the ones that pay Robinhood. Firms like Citadel pay Robinhood to send them users' orders for fulfillment in a system called payment for order flow. In other words, market makers and clearinghouses are Robinhood's clients, and we, or more accurately our orders, are the product that Robinhood sells them. This alone doesn't mean Robinhood is bad. Payment for order flow is actually pretty common. But we have seen plenty of examples in which Robinhood goes well out of its way to protect its clients at the cost of its users. Probably at the forefront of everyone's mind is the GameStop fiasco. We are all going to remember that incredible week of the initial gamma squeeze in late January, and how the big money shut us down and killed the little man. And although Robinhood wasn't the only one caught in this trap, it did appear to be the most aggressive brokerage when it came to shutting off its users' ability to buy. This, of course, effectively ganked that first squeeze. As far as I know, only the full-service broker-dealers like Fidelity and Merrill Edge never killed that buy button, with the rest of them turning it off. We could write an entire thesis about why this happened, and some very motivated college senior probably will. But for our purposes, this is the result of Robinhood not having adequate money available to meet deposit requirements with its clearinghouse. In simple terms, Robinhood doesn't have enough money to make sure its users can continue trading during all market conditions, and wasn't prepared to put up more cash to ensure its services stay active. Instead, it decided to screw its users, aka the product, in order to protect itself and its relationship with its actual clients. This isn't the first time Robinhood robbed us either. Those who invested in early 2020 won't forget when Robinhood died in early March, when the market went up like 4% on a Friday after melting down all week. Put holders got screwed because they couldn't sell their puts to take profits, and all Robinhood offered them was some free Robinhood Gold, a $5 Robinhood Gold coupon, and a "we're sorry for the inconvenience" message. It was insulting. They're getting sued for this. We've also got issues with Robinhood getting sued for not providing the best available price to its users. And perhaps most stressing, Robinhood has some absolute piss-poor options execution that makes it look like you're going to jail when your vertical spreads expire. And as we know, that unprofessional price representation was a contributing factor in a young trader's decision to commit suicide. And Robinhood still hasn't fixed this problem, despite it literally contributing to someone's death. And if that isn't enough and you want something more concrete, let's talk about how they don't offer any tax-advantaged accounts like IRAs. They offer no means of buying indices or bonds, and legitimately have no phone number to call when you need customer support. They also casually restrict certain securities like limited partnerships. My friends, Robinhood is the junior varsity trading platform. They don't care about us as clients because we are not clients. They just care that people keep signing up to become their products. And you deserve better. So where do we go? This is my list of recommendations based on your needs as a trader. Here's the TLDW, but keep in mind I'll expand on all of these throughout the video. For the absolute noobs, it's okay to stay on Robinhood until you're familiar with trading and understand option strategies. Robinhood is still a great place to start. But once you're familiar with trading and have an account in the $5,000-ish range, it's time to move on. I recommend Webull for the next natural step up. At this point, commission-free trading is still important to you, which Webull has and will always have. It also has IRAs and an IPO center, which allow you to expand your trading approach. Webull is a good step up for those in the growth stage of their investing career, which I define as the $5,000 to $50,000 account range, after which point you'll be ready for the big leagues. Once you hit 50 grand, you don't have to worry about the pattern day trader rule, which ends at 25,000, nor are commissions really that big a deal at this point. Once you hit that 50K, you should look at the full-service broker-dealers, especially the ones affiliated with banks like Merrill Edge, Fidelity, Schwab, or Ally. You'll start getting more guidance and support with additional products like mutual funds, 529s, and fixed income assets. All of these are important for the maturing investor. If you plan on staying an active trader focused on options, TastyWorks is the right alternative niche choice, especially above the $150,000 accounts when you become eligible for portfolio margin. TastyWorks isn't free, but once you're cracking into those $50,000 to $100,000 accounts, you won't mind the commissions, and what you're getting is worth the cost. Tasty is heavily geared toward the active options trader, so they've got all the account features and tools you need to kick your trading career to the next level and keep it there. Remember, you can also have more than one account. I have 3, so don't feel like your choice is an all or nothing. Alright, that was a very long TLDW. Let's get down to brass tacks. I'll start with Webull since they're the next logical step for somebody ready to graduate out of Robinhood. I am a Webull user, I like the platform, and they've got a couple great features that really do set it apart. Bottom line up front, Webull is best as a main broker for users upgrading from Robinhood or those who need an IRA, or as an alternative account for people already on a full-service broker but want some additional features. So why Webull over Robinhood? First, and I can't emphasize how important this is, they have a phone number, and you can call it for customer service. And when you call it, someone answers. Groundbreaking. They could teach Robinhood something. Next, and more seriously, Webull doesn't have any Webull Gold nonsense like Robinhood. Robinhood is the only broker I have ever heard of that charges people $5 a month to have margin access. Like the rest of the world, Webull offers margin access for free. That's $60 a year in savings by using Webull instead of Robinhood. And even more importantly, Webull recently implemented option spreads up to level 3, just like Robinhood, and they're working on bringing this up to level 5, which will capture every possible option strategy, including those not available on Robinhood. For over a year, I was waiting on this feature, since Webull was only suitable for the wheel strategy prior to this. But now, we can finally use our credit spreads, debit spreads, and condors. The interface could use some work, and I expect it will improve as more features get added, but it's all there, and it's fully mission capable. Going a bit deeper beyond the surface, there are 2 features of Webull here that make it a really great platform as either primary or a secondary account. Very importantly, they offer IRA accounts, both Roth and traditional. These individual retirement accounts offer tax advantages to investors, meaning Uncle Sam won't come for your gains. If you're particularly struggling, you might even get a tax credit for depositing into an IRA. In a traditional IRA, you don't have to pay taxes on the money you deposit, but you do pay taxes when you withdraw after age 59 and a half. In a Roth, you must pay taxes on your deposits, but don't pay taxes when you withdraw. Either way, these are much better than the normal investment accounts, the only kind that Robinhood offers, in which you pay taxes on your deposits and on your gains, even if you don't withdraw. That's called a taxable account. Every brokerage has those, but not everyone offers an IRA. Robinhood doesn't have IRAs, but Webull does. So if you're not associated already with a bank or broker that offers IRAs, then Webull is a great step up. That being said, investing in an IRA is a much larger commitment than a taxable account. Even though the trading aspects feel the same, make sure you read up on how to use these effectively. And additionally, Webull offers an IPO center via its partnership with Click IPO. As far as I can tell, this really is a unique feature that I haven't seen on any other broker, and it's one of Webull's most compelling features. Webull's IPO Center allows the trader to enter orders prior to a stock's IPO, and Webull then attempts to purchase shares during the period of time in which only institutions usually have access. Instead of waiting for a stock to IPO and then begin trading to retail at 1 p.m. at double the IPO price, the savvy investor can use Webull's IPO Center to get in earlier near the stock's actual IPO price. This also potentially means getting in on SPACs near their $10 net asset value, and that's just something you can't beat. For examples of how the IPO Center helps, let's look at Snow. By the time retail traders had access to this equity on their regular brokers, Snow more than doubled from its IPO price. Retailers had to spend twice the amount of money as those who could get access pre-IPO, and this is a very common phenomenon. Retail traders often get priced out before they can even lick the lollipop. Webull's IPO Center flips the script and offers us a means of getting in on these highly anticipated IPOs at much better prices without waiting for the institutions to finish eating so that we can dine on their scraps. And just to depress you, $1,000 invested into either Google or Tesla's IPOs would be worth over $1 million each today. There's a little bit of a cherry-picking bias there, but if you pick the right stock, buying at IPO can print you a mint, and you could probably make a career out of buying SPACs at $10 and selling them for $12 a month later. Keep in mind that you're not guaranteed shares when you use the IPO center. You enter your proposed investment amount, like a limit order, and Webull will attempt to get you in before it opens to retailers. Webull prioritizes by investor score, which is based on how long you usually hold IPO shares before you sell. The longer you hold an IPO's shares, the higher on the priority list you'll be for future IPO fills. This is a method of ensuring the priority buyers are actually investing in the company, not just flipping the stock to dunk on other retail traders, although you can still do that if you really want to. The minimum purchase for the IPO center is $100. Personally, I think it's worth having Webull just for the IPO center if nothing else, making this a good secondary account for those who are already happy with their full-service broker. On the negative side, Webull doesn't give you that crisp interface that we get on Robinhood. Webull also has fewer cryptocurrencies available to trade than Robinhood does, and it's the same deal. You can't actually withdraw the coins, you're just speculating on price. Webull also doesn't offer drips, which are real good for the passive investor types. And lastly, Webull uses payment for order flow just like Robinhood and a whole bunch of other brokers too. Webull got caught up on that GameStop restriction fiasco along with everyone else, but there's no telling if they'll be more prepared for the next snafu. At least they held out a few hours longer and then snitched on the clearinghouses to Yahoo Finance, which I can respect, but Webull will need to demonstrate its ability to look out for its users more thoroughly before I'm willing to say there's no risk here. Despite these negatives, this broker is great and definitely an improvement from Robinhood. Right now, Webull is offering new users 2 free shares, one for opening an account and one for making a $100 deposit to start trading. Ask your friends for their referral so they can get a free share too. Or if you don't like your friends, use my referral link and help a brother out. If I get a decent enough number of shares, I'll make a video of myself opening them so as to flex on the poor. If you're ready for something a little more heavily geared toward active options trading, then it's time to open up the trillest broker, TastyWorks. If you're an active options trader watching this video and you have an upper 5-figure or 6-figure account, I'd say there's a pretty strong possibility that this is the broker you need. Bottom line up front, TastyWorks is best for active options traders, especially those who use short strangles and straddles. You pay a commission of about $1 per contract, up to $10 per leg to open a position and $0 to close, so it's not free, but you get great features and service for this pretty meager price. You get what you pay for. Also, this broker is offered internationally, so if you're not American but want to trade American equities and options, TastyWorks is home. Like I mentioned a couple times already, TastyWorks is designed to cater to the needs of the options trader. It offers many types of accounts, but the premier feature is a taxable account called The Works. This is a margin account and offers level 4 option strategies, allowing you to trade from covered calls all the way up to naked straddles. Naked shorts can be risky, but selling a 30-day to expiration short straddle on SPY is extremely efficient on your buying power and offers excellent premium and break-evens. If you're a trader by profession or by extreme side hustle, then this is the account type you need. In addition to absolutely superior buying power efficiency using Tasty's portfolio margin allowance, you also get some other really cool features. TastyWorks allows trading on futures, not to be confused with pre-market trading, but actual index futures like the E-mini S&P 500. Although I am gun-shy about trading futures, people make entire careers out of it, and Tasty is certainly the least expensive platform to do it on. You can also trade options on futures if you want to quit cocaine and get your fix the all-natural way. Tasty also offers IRAs, including SEP IRAs for self-employed people, and it also integrates with its education features and talk show Tasty Trade, so you can learn while you wait for your short puts to expire. And of course, you get top-tier customer service and support across the board. When it comes to professionalism, you can't beat Tasty. On the negative side, there's only one bad thing I can say about TastyWorks. It's not free. $1 per contract up to $10 per leg adds up quick. If you're selling 5 put credit spreads, then you're paying $5 to sell the puts and $5 to buy the other puts for a total cost of $10 to open. Closing the spread is free. But if you're selling 10 iron condors, that's $40 of commission. Fortunately, the costs stop at $10 per leg, so you don't need to worry about commissions over $40. However, you may run into significant regulatory fees and clearing fees if you're trading 100 iron condors, for example. I don't know anyone who does that, but if you're trading boatloads of spreads each week, then the commissions may not be enough to justify using this platform. But if you're like me and you just trade 1 to 2 spreads at a time, you won't even notice the commissions. And those commissions are funding the top tier platform features. Tasty makes occasional use of payment for order flow, which is becoming pretty industry standard these days. But Tasty's revenue stream means it does not depend on PFOF like other brokers. And I also trust Tasty to put users above PFOF clients. I'll probably make my way over to TastyWorks eventually, but right now I'm still on Merrill Edge, which we'll talk about in a minute. If you are interested in Tasty, they've got 2 different sign-up promotions going on right now. When you sign up and deposit $2,000, you can choose to receive either $200 of crypto, courtesy of Zero Hash with the first offer, or 100 shares or 10 options contracts with TastyWorks itself with the second offer. The stock and options tend to average being worth about $200 anyway, so more or less, you're getting a 10% bonus on your deposit. These sign-up bonuses are not affiliated with any user's referral link. They're sponsored by Zero Hash and TastyWorks respectively. I have links in the description for these 2 offers, but again, they're not a referral link. They're just links to the website. If you do want to use this broker, I ask you to sign up with one of those offers and then email support@tastyworks.com and let them know that Theta Gang's Mr. Ivy referred you and include his referral link in the email. They'll know what you're talking about. This is Mr. Ivy's referral link, and unfortunately, you can't choose one of these sign-up bonuses if you use a friend's referral link. But to look out for you guys, we want you to use the sign-up program so you can get your free stuff. And if you'd be so kind, email support and let them know how you wound up on Tasty so Mr. Ivy can get his referral bonus too. It's a pain in the ass and we're trying to resolve it with Tasty, but if we jump through some hoops, we can all look out for each other. Thank you for your support. And lastly, we've got the full service brokers. If you're not interested in TastyWorks, then this is the goal you should aim for. Once you start tapping on $50,000 in your account, it's time to come to one of these. We're talking Fidelity, Merrill Edge, Thinkorswim, Charles Schwab, and plenty of other big names. In fact, you can probably skip Webull if you don't like it, and come straight to one of these from Robinhood. But be aware that the fees will drag you down just a little bit. You're likely paying some level of commission, but you get the widest possible range of tools beyond those for typical traders. For example, most of these brokers will give you access to 529s, which are the proper way to save for your kid's college, or your own college for that matter. You can deduct from your state taxes any money invested in a 529, and any withdrawals used for education expenses are tax-free. This is a lot better than making a, quote, college fund in a savings account. You'll of course get access to IRAs, including SEP IRAs for self-employed people, and plenty of fixed income options later down the line. All of these tools and more will be incredibly valuable to you as you mature as an investor and no longer want to throw all your money at leaps. I keep my main account with Merrill Edge, which is affiliated with Bank of America. There's only a small proportion of the population that would benefit from this brokerage, but I am one of them. Bottom line up front, Merrill is best for people who hit all of these criteria. A, you use Bank of America credit cards. B, you have a 6-figure account balance. And C, you rarely or never trade 4-legged strategies. Those are condors and butterflies in your main account. If that sounds like you, Merrill is a good choice. Merrill Edge collaborates with Bank of America to offer banking benefits to people who use both the bank and the broker. If you have $100,000 in bank accounts and in stock accounts combined, then you get very good credit card rewards, like an extra 75% boost on cash back. So instead of 3% back on gasoline, I get 5.25% back. It also offers reimbursement on ATM withdrawals and deep discounts on closing costs when you buy a home. But unless you're one of the people who fits all of those criteria above, you're almost certainly better off elsewhere, so I won't spend too much time on this one. If you want to talk about Merrill, follow the Discord link in the description and hit me up. With all that said, there are still a couple of reasons to stick around on Robinhood. Robinhood does have the best user interface of any broker, hands down. It's designed to help you start losing money as soon as possible. If you are brand new and need to have your hand held, then use Robinhood to gain experience. There's nothing to be ashamed of if you prefer Robinhood's interface over TastyWorks while you're just getting started. I do recommend you look to upgrade to a better broker as soon as you're ready. Let Robinhood be a practice platform only. If you insist on Robinhood, use my friend iKillsYou's referral link in the description. Sign up through that one and you'll both get a free share. I hope this video helps you all realize the importance of moving on to a better broker where you can at least be respected as a client and not just a product. Whatever broker you choose, whether one of these or another, or if you choose to stick with Robinhood after all, the most important thing is that you're having fun and making money. Best of luck to you all, and may your trades bear fruit. Catch you next time.